Hi and welcome back to 𝗕𝗘𝗪𝗏. Today guys, we're going to be talking all about XRP. It finds itself in a pretty difficult spot, so let's go ahead and jump down into what is going on here with XRP. So as I get into it, if you find it useful and informative, smash the like button. If you're new, subscribe, and if you haven't yet joined us in Discord, check it out, link in the description below. It's completely free and I don't think you'll be disappointed by what you find down there. Let's jump into this, right? So XRP paired up with USDT. We're on 𝗕𝗘𝗪𝗏 spot exchange, and this is the 1 hour chart. And here we can kind of see that we're still in a bearish structure. We haven't broken that. We do find the fair value gap just up here. Okay, this is coming in at 48.162 to 49.982. Let's just jump on over into 𝗕𝗘𝗪 here. We'll go into our spot trading. Is XRP listed here? Yes, perfect. We'll just go straight into XRP. And so yeah, XRP on spot USDT, you can see that we've got the fair value gap still in there. And this fair value gap, as I said yesterday, is created from an imbalance in the order books. Basically, a large sell order or large sell orders come in up here. They fit in the order books up the sell order books just at the top. There's not enough buying happening inside here, so there's illiquidity, not enough liquidity to basically fulfill those sell orders. So price has to move down to the low range before buyers are found and liquidity is restored. And as such, that imbalance in this order book creates a gap. The gap, we call it a fair value gap, and in this case is 48.162 to 49.982, and essentially price likes to go back and fill those gaps. Now, as you can kind of see, previous gaps that were left behind, we tested it quite aggressively, then broke through it. Over here, we tested it quite aggressively, then broke through it. But not all of these are exactly the same, right? So as we kind of breaking through this area, we're looking at testing it, we broke down, we're testing it, and we're coiling up. Now this coil right here, let me go ahead and just show you. We'll draw a line. I hate the blue ones. Let's make this yellow. Let's make it a little bit more visible. Right, we can see here that this is an ascending channel or an ascending triangular wedge, essentially, right? And it's going right up into this little area here. Okay, now the problem that we have is that whilst this is coiling up, we should be thinking about a break to the upside, right? We should be thinking break all the way. Man, these blue ones, I'm going to change everything to yellow. There we go. Right, we should be breaking to the upside, right? And the issue here is that we want to make sure that we have the momentum to do so. At the moment, it looks okay. It looks like we're potentially going to get this break up, and we're likely to kind of push higher than 49.982, right? But there is, of course, those outliers. There's occasions where we do break down before we have that break upwards, okay? And we can see over this side that that's kind of what happened, right? We had our ascending kind of line in here, yeah? And then we broke down before we broke on up, okay? Which is different to kind of what was going on over this side, where we essentially just broke on straight up through it. Okay, so although we're here right now with this triangular wedge pattern, yeah, as long as the momentum's on our side, I think we'll be okay. And we should be thinking about this break to the upside, in my opinion. So yeah, it's just a matter of kind of making sure that we have the momentum behind it. Let's jump on back down into our chart here, right? So that's kind of what we can see going on, right? So we have our ascending triangular wedge right in here, and we are looking for that break through the fair value gap. I'm going to actually just turn this down a little bit. It's a little bit on the bright side. There we go. Okay, so we're looking to kind of break through there. Now, resistances. This is the main problem. Obviously, we're up against major resistance right now, but if we come up a little bit higher towards 48.779, you can see that this is also an area of consolidation in the past, an area that we bounced from over here. In fact, let me actually go and snap a line right on there. Okay, so we have this low at 49.734. Okay, we consolidated on this line, and then we broke through it. So up here is going to be resistance, right? And that's also falling in line with the 50 EMA. So that's going to potentially be that scenario where we break down before we can break up. Okay, a breakup I think is an inevitability. It will have to happen, but it's not looking strong right now. Okay, so my concerns are that, you know, we're just going to coil here, then break down, and then we'll move to the upside afterwards. So it'd be interesting to kind of see how that one plays out from this kind of smart money concepts, where we can see ourselves in the bearish structure. We are below equilibrium. We are below the 50 EMA. We're below the 200 EMA. We've also lost the key support level of 48.734, and that's likely to be resistance for us. So there's a few things to kind of be concerned about. Let's move over into the Elliott wave side. Okay, so under the Elliott wave theory side of things, what are we seeing? Well, we've avoided the 1.618 at the moment. We can see a bit of a coil up here. Let's actually take this into a 1 hour chart. You can kind of see that our expectations here are kind of already done. So this is why I say this, we are looking for that break to the upside. I don't think there's a reason to think that we have to kind of come down even more. We are, of course, doing this expanding pattern, and it's quite an interesting one in itself, right? So we have 3 waves here, we've moved up, we have kind of 3 waves coming down. The next big move would potentially take us up quite high. So, you know, I think things are gearing up for that. I think the entire market is gearing up for a bit of a swing in the market. So all in all, I'm expecting a bigger move for XRP to the upside. It's just about trying to make sure that we get past some of these areas of resistances that we've kind of got ourselves stuck into in the past. So I'm just going to go ahead and remove some of these lines, take all these off because we don't need them all. That's actually quite an important one, so I'm going to leave that one in there, and I'll leave the 1.618, but I'll remove these as well. So for the most part here, we can see that, yeah, we've got a bit of an issue where we are. We're finding ourselves coiling up a little bit. Let's go ahead and just see if there's any divergences that are appearing. Yeah, hidden bearish divergence right inside here. So it's not looking strong. My opinion is that we're probably going to have to break down before we move up. It's going to be an unfortunate event where a lot of people are thinking that we might be coiling up and getting that bigger move, which I think is going to happen, but I think it's going to liquidate people beforehand. So just a little bit of caution there. You can see here we've got hidden bearish divergence. Essentially, we are lowering the prices there whilst lifting the RSI. It's not a great sign to be fair, because it's not a perfect wedge, because it is actually slightly decreasing here and it is increasing here. Okay, so it's coiling up quite a bit, and you can see that it's being picked up on this indicator for divergence. So we can see that there's hidden bearish divergence on that one. The RSI, as you can kind of see, is right there. The volume indicator is also showing us with slightly higher selling volume than buying volume, and we are still decreasing our stochastic RSI as well. 4-hour stochastic is okay, 8-hour is okay, it's actually in a good spot. 12, let's go good, 16 is good, daily is good, weekly obviously is still aggressively high. Yeah, for now, looking at it, we're probably going to have to move down before we move up, which means we're probably going to have to break down out of this area before actually going after the fair value gap around 50 cent, and potentially even more than that if we think about the move here of this expansion. Doesn't necessarily have to be the case, but by the time that next move completes to the upside, we're going to be overbought on the weekly time frame, and I would expect a significant drop to the downside after that. All in all, though, you know, I think that the fair value gaps, as indicated in the order books, are an interesting kind of play, because I do expect, yeah, we're probably going to have to move down and then break on up through that fair value gap and the imbalances on those order books. I think we're probably going to see a fair few more. There is actually one slightly higher. We could kind of see that in our chart up here, this little red area just on equilibrium. Chances are that we are going to have to visit that at 51.2 to 51.3. That's likely to occur, so we can see that that's slightly higher up in the price chart, right up in here somewhere. There's actually, I can see this little one up here as well. So there's a little bit of work to be done in the higher price ranges, but not a huge amount. So the expectation will be that eventually we will break onto the downside, but I think a significant surge upwards first is due. So yeah, I think that's going to kind of just wrap this one up. A nice brief update onto what is going on with XRP. If you found it useful and informative, smash the like button. Do appreciate that. If you're new to the channel, subscribe. If you haven't joined us in Discord, check it out, linked in the description below. And if you are looking for a new exchange, why not check out 𝗕𝗘𝗪𝗕? They've got XRP on spot. KYC is optional. I think KYC is quite a tricky thing. If you're in the US and you're KYC'd, you're not going to be allowed to use the platform. And you do need to be KYC'd to onboard fiat, but you don't need to be KYC'd if you're going to deposit stable coins coins onto their platform and then basically just trade with the stable coins. It becomes more problematic when you're looking to onboard fiat because they do need KYC to be able to prove who you are and all that kind of stuff. So if you're looking for a KYC free exchange and you're just going to be moving stable coins around, then why not check that out? An affiliate link is in the description below. It is my go-to platform at the moment. I use 𝗕𝗬𝗪 for my spot trading and my leverage trading, but I don't onboard fiat there. I only use stable coins. I use Coinbase for onboarding fiat at the moment. So yeah, that's kind of my route to things. But I also have other avenues in which case to buy as well through Revolut and so forth. So lots of different ways of kind of approaching the market. But if you're in the US and you're looking for purchasing XRP on spot, you can use 𝗕𝗬𝗪 to do so. Just you won't be able to KYC, otherwise you will get restricted in that kind of way. But again, you should really be paying attention to the laws and the rules in your jurisdictions. I'm not a financial advisor. I can't give you any financial advice. All I can do is give you my thoughts and opinions on the data as I see it, and the various different tools that are available to help you kind of achieve your personal goals and targets should you choose to do so. I'm going to leave it there. Hit the like button on the way out, guys, and I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.